You need to understand that we are in the middle of the largest panic flight to gold in modern financial history. $148 billion has flooded into gold funds on an annualized basis, $19 billion in January alone. The Middle East is on fire. The U.S. national debt just crossed $38 trillion. Sovereign debt crises are accelerating across the developed world. And in the middle of this absolute chaos, the mainstream financial media is lying to you. They are actively begging you to buy paper gold ETFs instead of physical metal. And if you fall for this trap, if you hand your wealth over to Wall Street in the form of a digital ticker symbol, you're going to lose everything when the system freezes. I'm talking about publications like the Motley that are running articles right now telling retail investors to avoid physical gold because of storage and insurance headaches. They are telling you to buy the SPDR Gold Shares ETF, ticker symbol GLD, because it is easier and more convenient. This is financial propaganda designed to separate you from real wealth and trap you in a counterparty risk nightmare. The suits want me to tell you this is not financial advice, and they are correct. This is not financial advice. This is a survival manual for people who understand that paper promises burn in every single crisis and physical assets are the only thing that survives when the banks close their doors. Let me know in the comments below because I need to know where this community stands on the most important wealth protection question of 2026. Are you holding real physical ounces of gold and silver in your own hands, stored outside the banking system? Or did Wall Street trick you into buying a paper ETF ticker symbol that you think represents gold, but actually represents a counterparty risk time bomb that is going to detonate the second the geopolitical situation gets worse? Drop a comment right now. Tell me if you own physical metal or if you own paper promises. Because your answer is going to determine whether you survive the next phase of this crisis or whether you get financially destroyed when the system hits a breaking point. Now let me break down exactly how this trap works, because this is not obvious to most people, and Wall Street is counting on you not understanding the fine print. When you buy a share of the SPDR Gold Shares ETF, when you buy GLD, you think you are buying gold. The marketing makes it sound like you own gold. The price of the ETF tracks the price of gold. It goes up when gold goes up, it goes down when gold goes down. But you do not own gold. You own a share in a trust. You own a piece of paper, or more accurately, a digital entry in a brokerage account that says you have a claim on a portion of the gold that is supposedly sitting in a vault somewhere. That is not the same thing as owning gold. That is owning a promise that someone else is going to honor your claim to gold if, and when you decide you want to convert your paper shares into physical metal. Here is the problem. Go read the prospectus for GLD. Actually read it. I know it is boring. I know it is written in legal language specifically designed to confuse you and put you to sleep. But if you actually read it, you will find the clause that explains what happens in a crisis. The clause that says if there is a liquidity event, if there is a banking system stress, if there is a geopolitical shock that makes physical delivery impractical or impossible, the fund has the right to settle your account in cash, not gold. Cash. Fiat currency. The same fiat currency that is being debased at an accelerating rate. The same fiat currency that has lost half its purchasing power in the last 15 years. The same fiat currency that is backed by a government with $38 trillion in debt and no plan to ever pay it back. So let me walk you through what actually happens when the crisis hits. You bought GLD because you are smart. You saw the Middle East escalating. You saw the debt spiral accelerating. You saw gold breaking $3,000 and you decided you wanted exposure to gold. But instead of buying physical gold, you listened to the Motley and you bought the ETF because it was easier. No storage fees. No insurance. No hassle. Just click a button, buy the shares, and you are golden, right? Wrong. Dead wrong. Fast forward 6 months, Iran closes the Strait of Hormuz. Saudi Arabia gets hit with a massive attack. The regional war that everyone has been warning about finally happens. Oil spikes to $150. The stock market crashes, the banking system freezes. Liquidity evaporates. And suddenly, everyone who owns paper gold wants to convert it to physical gold because they realize that in a true systemic crisis, physical assets are the only assets that matter. So you call your broker. You say, I want to redeem my GLD shares for physical gold bars. And your broker laughs at you. Not because they are cruel, but because that is not how it works. You cannot redeem GLD shares for physical gold unless you own enough shares to equal a full London Good delivery bar, which is 400 ounces, which at current prices is over $1 million. And even if you have enough shares to meet that threshold, even if you are a high net worth individual who can actually request physical delivery, the fund does not have to give it to you. Read the prospectus. They can settle your account in cash. They can liquidate your shares at the current market price, hand you dollars, and send you on your way. And in the scenario I just described, in the scenario where the Middle East is on fire and the banking system is frozen, and everyone is trying to get out of paper and into physical, what do you think is happening to the purchasing power of those dollars? It is collapsing. The very crisis that made you want to own gold in the first place is the same crisis that is destroying the value of the fiat currency they are forcing you to accept as settlement. This is the counterparty risk trap, and it is designed to transfer wealth from retail investors to the financial elite. Here's how it actually works behind the scenes. When you buy a share of GLD, your money goes into the trust, and the trust uses that money to buy physical gold. And that physical gold sits in a vault controlled by a custodian, which in the case of GLD is HSBC. So your money, the collective money of millions of retail investors, is being used to accumulate physical gold bars that are stored in vaults controlled by the same banking system that has a vested interest in maintaining the paper money system. You are essentially crowdfunding the physical gold hoard of the financial elite. You are giving them your capital so they can buy the real asset. And in exchange, they are giving you a digital IOU that you cannot redeem when it actually matters. And here's the really sick part. While Wall Street is telling you to buy paper gold, while publications like the Motley are running articles about how physical gold is inconvenient and you should just buy the ETF, the billionaires are doing the exact opposite. Paul Tudor Jones is terrified of the $38 trillion debt. He has been screaming about it publicly. And do you think Paul Tudor Jones owns GLD? Do you think he owns a paper ETF that can be settled in depreciating fiat currency? Absolutely not. He owns physical gold. He owns bars stored in private vaults outside the banking system. He owns the real asset, not the paper promise. The same is true for every major hedge fund manager, every billionaire, every financial elite who actually understands how the system works. They own physical. They tell you to own paper. And when the crisis hits, they will be holding real wealth while you are holding a brokerage statement that says you used to own something valuable before it got liquidated into worthless dollars. Look at what is happening right now in February of 2026. $148 billion flowing into gold funds. That is not a normal market move. That is panic. That is the smart money and the institutional money recognizing that the sovereign debt crisis is no longer theoretical. It is here, it is now, and it is accelerating. The US national debt is $38 trillion and growing by $1 trillion every few months. The interest payments on that debt are now larger than the defense budget. There is no path to fiscal sustainability. The only options are default or hyperinflation, and neither of those options is good for people holding fiat currency. So capital is fleeing into gold, which is exactly what you would expect. Gold is the historical safe haven. Gold is what people buy when they lose confidence in paper money. Gold is the asset that has survived every currency collapse in human history. But here is the problem. The financial system does not want you to own physical gold. They want you to own paper gold because paper gold keeps your capital inside their system. If you buy physical gold, you take that capital out of the banking system. You withdraw it. You convert it into an asset that they do not control. But if you buy a paper ETF, your capital stays in the system. It stays in a brokerage account. It stays under their control. And they can use that capital to buy the physical gold for themselves while giving you a paper IOU. This is the greatest financial scam of the modern era, and it is happening right now in plain sight while the mainstream media runs cover for them. I read the boring legal prospectus of these Wall Street funds so you do not get financially slaughtered when the crisis hits. I dig through the fine print. I track the institutional flows. I watch where the physical gold is actually moving, not where the paper claim state is moving. And I do this because I know that in a true systemic crisis, the only thing that matters is what you physically possess outside the banking system. If this truth bomb helps you protect your family's wealth today, if it keeps you from making the catastrophic mistake of trusting Wall Street with your gold exposure, then consider hitting that super thanks button below to support the channel. This channel does not run on sponsorships from financial institutions that want to sell you paper products. It runs on support from people like you who understand that real wealth protection requires real information, not marketing propaganda. Now let me give you the action plan, because understanding the counterparty risk is only useful if you know what to do about it. Ignore the mainstream media's warnings about storage fees. Ignore the articles telling you that physical gold is inconvenient. Ignore the narrative that says paper ETFs are good enough. They are not good enough. They are a trap. True wealth protection has zero counterparty risk. True wealth protection means you own the asset outright. You control it, you store it, and no bank, no government, no financial institution has the ability to take it from you or force you to accept depreciating fiat currency as a substitute. The only way to survive the coming sovereign debt spiral, the only way to protect your family's purchasing power through the crisis that is unfolding right now in 2026 is to hold physical gold and physical silver outside of the digital banking system. This is not theoretical. This is not paranoia. This is based on historical precedent. Every single time a major financial system has collapsed, every single time a currency has hyperinflated, every single time a government has defaulted on its debt, the people holding paper promises got destroyed and the people holding physical assets survived. In Weimar Germany in the 1920s, if you owned paper marks, you got wiped out. If you owned physical gold, you preserved your wealth. In Argentina in the 2000s, if you trusted the banking system, you lost everything when they froze accounts and forcibly converted your dollars to pesos at a confiscatory exchange rate. If you owned physical gold outside the banking system, you survived. In Greece during the Euro crisis, if you had all your wealth in a Greek bank, you got bail-in, you got haircut, you got capital controlled. If you owned physical gold, you had optionality, and you could move your wealth across borders. The pattern is always the same. Paper burns, physical survives. And right now, in February of 2026, with $148 billion flowing into gold funds, with the Middle East on fire, with the US national debt at $38 trillion, with sovereign debt crises accelerating across the developed world, we are in the early stages of the next great financial crisis. And the people who own physical metal are going to be on the right side of history, and the people who own paper promises are going to be telling their grandchildren about how they almost got rich, but Wall Street stole it from them at the last second. So here's what you do. If you own GLD or any other paper gold ETF, you need to have a serious conversation with yourself about what that actually represents. It represents counterparty risk. It represents a claim on gold that you cannot enforce in a crisis. It represents a paper promise that can be settled in fiat currency. And if that makes you uncomfortable, if you understand that the entire point of owning gold is to protect yourself from the collapse of the fiat currency system, then you need to exit those paper positions and convert them into physical metal. Yes, there are storage considerations. Yes, there are security considerations. Yes, You have to think about where you are going to keep it and how you are going to protect it. But those are good problems to have. Those are the problems of someone who actually owns wealth instead of someone who owns a digital entry in a brokerage account that represents a claim on wealth that someone else controls. I'm going to be tracking these massive billion-dollar gold fund inflows all week. I want to see where the physical metal is actually going. I want to see which vaults are being filled. I want to see if the retail inflows into paper ETFs are being used to drain physical gold from the system and concentrate it in the hands of the financial elite. Because that is what I suspect is happening. And if I am right, if the data confirms that Wall Street is using retail capital to hoard physical bullion while handing retail investors paper IOUs, that is going to be the story of the decade. Make sure you are subscribed to this channel with the bell notification turned on, because when I put out my next vault exposure report, when I show you exactly where the physical gold is going and who is accumulating it, you are going to want to see that immediately. This is not entertainment. This is not financial news for clicks. This is investigative analysis on the greatest wealth transfer in modern history, and you need to be on the right side of it. Here's the bottom line, and this is a truth that Wall Street does not want you to understand. Paper promises always burn in a crisis. Always. Without exception. Every single financial crisis in history has been characterized by a flight from paper to physical. People realize that the paper is only worth something if someone else honors it, and in a crisis, nobody honors anything. Contracts get broken. Promises get defaulted. Accounts get frozen. And the only people who survive are the people who own real assets that they control. Physical metal survives. Physical gold has been money for 5,000 years. Physical silver has been money for 5,000 years. Every empire that has ever existed, every currency that has ever been created, has eventually collapsed. But gold and silver are still here. They are still valuable. They are still recognized as stores of wealth by every culture on the planet. That is not going to change. The dollar is going to collapse. The euro is going to collapse. Every fiat currency in existence today is going to eventually lose its purchasing power. But gold and silver are going to be here long after the central banks are gone. I just posted my exact exit strategy for paper markets and the specific physical bullion I am stacking this week to my private community. I broke down the exact products I am buying. I explained why I am prioritizing certain forms of physical metal over others. I showed the math on how to calculate your storage costs versus your counterparty risk. I gave my timeline for when I expect the paper gold market to break and the physical premiums to explode. If you want to see exactly how Captain Silver is preparing for this geopolitical storm, if you want access to the vault tracking data I am compiling on institutional gold flows. If you want to be part of a community that understands the difference between owning wealth and owning a promise of wealth, click the join button below and become an insider member right now. The people who join today are going to have front row seats to the collapse of the paper gold market and the greatest flight to physical assets in modern history. Do not let Wall Street trap you in a paper ETF while the billionaires hoard the physical metal. The only wealth that matters is the wealth you can hold in your hands. Make sure you are positioned correctly before the system freezes. I will see you in the next video when we expose exactly which vaults Wall Street is draining while they sell you paper promises.